Welcome back to TradeVox. Before we go deeper on any strategy or concept, let's first talk about the Fibonacci tools and the different guidelines that will guide you whenever you're using the Fibonacci tool. Now, in every trend, in respect to the Fibonacci tool, there are places in the Fibonacci that the market is going to retrace. And this is according to how strong or tender the trend is or how respective the trend movement is. So I will be giving you a quick view on each point and what to know when using the Fibonacci tool. The first point is the 0.38 point, and this is known as the strong trend point. Whenever price reaches the 0.38 point and reverses, then we call that the strong trend point. So for example, we have a downtrend and price touches the 0.382 point and reverses back, then in that scenario, we have a strong downtrend. Second point is the 50%. Now, the 50%, most people mix it and call it the golden point, but it is really not the golden point. It is just typically defined as the fair price. That is the balance in price. So in a downtrend, if a trend should go down and retrace back to the 0.5 zone, that means it is a balanced trend. Then when it comes to the 0.18 point, it is typically known as the trend continuation path. We have price go down, come up to touch our golden ratio, form a bit of a confirmation pattern for taking our trade, continuing the trend entirely. That is the power of the golden ratio in the Fibonacci tool. Then the 100 point is known as the failed trend continuation or exhausted trend. That is when the trend behaves like this. You have price going down and price broke against the balance zone, broke against the golden ratio point and reached this zone right here, which is the 1%. Price indeed is not going to be coming down like this, but highest we will have a reaction and obviously our trend is going to be broken. So that is just the understanding of each point in the Fibonacci tool. So now let's go to the 3 ways to trade them in harmony to the 1.618 point in the Fibonacci tool. Now the first method to trade using the Fibonacci tool in harmony with the golden ratio point is using a technique called the swing relapse. And this swing relapse is basically finding a direct swing in the market, that's the trend in the market, then using the Fibonacci tool to highlight the 1.618 point, look for confirmation when price reaches the 1.618 point or the 0.618 point before we take our buy trade according to the swing or sell trade if it is in a downtrend. So let's look at the chart quickly. We can see that this swing right now is a swing of uptrend. Why? Because we can see price making higher highs and lower highs respectively in the market. So we are in an uptrend. So this first swing right here, and mind you, when you're looking for a swing, make sure you look for a significant swing in the market. We can see that this swing right here was of high volume and it basically started the uptrend swing. So we are going to be using our Fibonacci tool. For uptrend, we click the lower part of the swing, dragging the Fibonacci tool to the highest part of the swing, which we can see it is right here. Let's take a look and see what price did in reaction to the 0.618 point, we can see that right here, we had multiple reactions within the 0.618 zone and one directly touching the 0.618 points in the market. So what do? We wait for a reversal or a break of a zone to apply before we take our trade. And as you can see, this zone was broken. We take our buy positions after the close of that zone. Stop loss slightly below the golden ratio zone, or you can keep it tight as usual. And our take profit is going to be 2 times or 3 times the risks as usual. So as you can see, the trade played out very well. This shows that the golden ratio point was very, very respected and valid, and the trend is going to continue in the further future. So let's check another swing and see what happened. Now, as we can see, we saw another significant swing, which is this very swing. You can see the momentum build up. Now let's get our Fibonacci tool. Let me just quickly clear out this. Get our Fibonacci tool from the lowest point to the highest point. Let me shoot this one out. You can see what happened in the 0.618 point. We had a very perfect reaction, and price indeed touched the 0.618 point, which is the golden ratio point in the chart. So this also signifies a very, very good confirmation that the trend is going to continue if price shows sign of going up. Now, what you need to do again is to look for a nearest zone. Price should break above the zone as confirmation before taking our buy trade. Stop loss slightly below the golden ratio point or tighter, and we are going to be targeting 2 or 3 times the risks. And as you can see, this was a very, very valid golden ratio point. Now, one thing about the swing relapse is that you need to be very, very sure in your swing. That means if your swing is an uptrend, you need to be sure that it is a very well-defined uptrend with high momentum swings to the upside. While if it is a downtrend, you have to be sure that it has high momentum swings to the downtrend. That is the only thing you need to do when trading the swing relapse. Now, let's use the swing relapse in a downtrend and see how to trade this very strategy in the downtrend of a market. So as you can see, we are in a downtrend. Why? Price is making lower highs and lower lows in the market, considering this swing to be a downtrend. So what do we do when we see a significant downtrend swing? Now, let's first look at the first swing right here. We can see this impulsive move generating and making this swing a valid downswing. So we take our Fibonacci tool. For the downtrend, we are going to be starting with the high of the swing, channeling it to the lowest point of the swing right here. And as you can see, price was able to reach the 618 point, which is the golden ratio point, before changing direction and continuing the trend. So we are going to be marking our 618 point. Price indeed entered the zone and created a little consolidation, breaking this previous zone right here. So that is where we are going to be entering our sell position. Stop loss is going to be slightly above the zone, or we are going to make it tighter, and we are going to be targeting 3 times the risks or 2 times the risks. And as you can see, it's always a win once you follow the swing relapse strategy. Now, if we are to measure this very swing, I can see another swing right here. See this impulsive move, and we have ourselves a downswing. So let's see if this is in correlation to our Fibonacci Golden Ratio. So the highest point rather, to the lowest point in the Fibonacci tool. As you can see, this very swing wasn't in line with our golden ratio point, and it stopped at the 0.382 point. And I said the 0.382 point is when there is a relatively strong trend in the market. So that is not something that you can enter. You can enter if you're very, very good at using the Fibonacci tool, but based off my swing release strategy, I advise you to always wait for the price to reach the golden ratio point, which is this point, cause a little change of character, and we are going to be taking our sell trend to follow the trend in general. Now let's go to the next method on how to trade using the Fibonacci in harmony with the 1.618 or 0.618 golden ratio point. The next method is what I call the dominant candle break or initial candle break method. Now this method is very effective because it always occurs in a chart. It is simply a candlestick formation and a Fibonacci tool confirmation to find perfect trade entries in the market. I have a full video on how to use this strategy, so click on the link in description to watch it, or just click on the video on the screen to watch it right now. Now, I'm not going to go in-depthly on what a dominant or an initial candle break is because I already gave you guys the video to watch, so you know how to use it. Now, this scenario right here is an initial candle break. 2 candles pass below one bullish candle for an uptrend. So what do? We pick up our Fibonacci tool and we target the shadow of the latest candle that broke within this bullish candle right here. So we take our Fibonacci tool in cases of a downtrend and we drag it all the way up to the wick or the highest point of that formation. Once that is done, we wait for a retracement to occur in our 0.618 point, which is this zone right here. And as you can see, price did that before taking our sell trade. Stop loss slightly above the balance zone, and take profit is going to be the 1.618 point, which is also the golden ratio point. Now, as you can see, this was a very perfect win, and I will show you guys another example so you will not think I am just drawing things on the chart. Now, here at this very end, we can see a bullish dominant candle break. Why? 3 candles broke past one bearish candle at the end of a swing. So what do? We are going to be taking a Fibonacci tool, targeting the shadow of the candle to the weak or lowest point in time. Now, if we drag this out, increase, now if we drag this out, we can see that price reacted in our golden ratio zone. We can see that price reacted in our golden ratio zone, which is this zone right here. So we are going to be taking our buy trades. Stop loss slightly below the balance zone, and our take profit is going to be the 1.618 zone. And as you can see, this was another clear win from a basically different example. Guys, these always form in the market, and there are certain ways to bypass the golden ratio zone using this specific strategy that I only stated in my video in the description. So if you want to know other ways to trade this strategy without having to wait for the golden ratio zone, that's basically trading like a pro, like how I do, make sure you watch the video and also understand the strategy very well. But for now, we are going to be always respecting the golden ratio zone when it comes to the dominant or initial candle break strategy. Guys, this goes on and on because basically dominant candle breaks or initial candle breaks always happen in the market, just that some don't often retrace back to the 0.618 points. As you can see here, we had a dominant candle break. If we go to the end of the swing, it is likely that another candle break formed. As you can see, the end of this swing, we had a dominant candle break. Let's go again. We can see at the end of this swing, another dominant candle break formed. Right here. At the end of this swing again, another dominant candle break formed. Guys, we can go on and on and on, and you can see that the dominant candle break is a very, very great strategy. And in relationship with the Fibonacci tool, you are always going to be making profits if you know this strategy very well. Let's do a quick top-down analysis on the AUD/USD on the 4-hour time frame using the Fibonacci swing relapse strategy. Now, as we can see, we were in an uptrend swing, but now we are diving into somewhat of a downtrend swing, but it is not fully a downtrend swing. I just see price reaching out for a zone, and as you can see, this is a valid support zone in price, current price right now. So I'll just quickly draw out the zone that are very visible to the eye, and it is often based on my precision. Okay. Now, as we see the zone, we can see price reacting. We can see price has reacted off that zone and is bouncing up. But price has to fill up these zones right here. That is where my Fibonacci tool comes in. Quickly take from the highest point to the lowest point. And I am going to draw out my golden ratio point, which is around this point. So I have to wait respectively for price to go up, give some form of change of character before I take my sell position again to the downtrend. But if that doesn't happen, I quickly just look at the point where the price creates a change of character. If the price creates a change of character right at this zone, price does a change of character right at this zone, right at the 3.82 zone, then I know that it is a really strong sell trend. If price continue further, reaching my golden point zone, then I know that it is a basic trend continuation pattern zone. But if price goes further and closes above this zone right here, then for sure I know that we are in a bullish momentum. We have to wait for price to go down before starting a new bullish tenure. But if price indeed doesn't even reach the golden ratio point or the balance point, price decides to, from this recent point in time, break my support zone, then I will be looking for sell swings in the market, because I am very certain that this trend is going to go over to the next support zone, and that previous support is going to turn to our resistance zone in the market. So that is just my quick analysis for the AUD JPY, and I will be looking and giving close watch on this trade. So make sure you stay in my Telegram channel. I do not know why, as my subscriber and as you guys are learning from this channel, you don't want to benefit extra from my Telegram channel. It's completely free. All you have to do is join, and you can see the top-down analysis and the perfect signals I have been placing there in my Telegram channel most of the time. Well, we have come to the end of today's video. I hope you guys learned one or two from these Fibonacci Golden Ratio strategies, and make sure you guys stay profitable because you're part of TradeWorks family. See you guys in the next video. Peace.